Hey, what's up? My name is Jeremy and welcome. We have to begin the show by reminding you to always stay safe and to follow SOP whenever and wherever possible. Now, 2020 has been a rather tumultuous year, and if there is one thing that we've learned is that if possible, you want to make as much money as you can because you never know what tomorrow might bring. And of course, you also want to be healthy, both in the physical sense and in the bank account kind of way. Now, speaking about making some extra cash though, some of my friends have started venturing into the stock market, stock investment. It's a little bit more talk about it these days that has gotten me intrigued. And it's a little bit more of a buzz, especially since you are able to potentially earn money whilst being under lockdown. Now, because some of us have jobs, but we can't travel, and as a result, we have a little bit more disposable income at our hands, why not consider it? Which is why joining me today, we have the Millennial Investor, Alex Ng, who's a master trainer and speaker from V College. Hey, Alex.
Hi, Jeremy. Thank you for inviting me here.
Now, this is the year of where we are hopefully recovering from a pandemic. And the coronavirus vaccine stocks, I would imagine, would be something that a lot of investors are looking into. So then the question is, should we start paying attention to the shares of these vaccine manufacturers like Moderna, Pfizer, or do we focus on the pharmaceutical or healthcare industry as a whole? What's your take on that?
Okay, we definitely can actually focus our investment in pharmaceuticals or COVID-19 companies, right? Pharmaceutical companies that have developed COVID-19 vaccines. Just to name a few, for example, you said Pfizer, Moderna. That's actually Johnson & Johnson, BioNTech, and of course, Novobax, okay? Now, yes, we definitely can consider, right? But before you actually choose which to actually invest, first, again, you need to understand the businesses, okay? Right. Applying the MGV investing strategy. And on top of that, you also need to understand what is your risk appetite, because some people can take higher risks, some people might not able to take high risks, right? So their risk appetite is much lower. Okay, so let's say I'm a low appetite investor, right? I'm looking for a steady company, maybe can give me some passive income. I want to build my retirement fund, retirement portfolio, right? So I'll suggest maybe you can actually take a look into Pfizer and Johnson & Johnson. Right now, why Pfizer and Johnson & Johnson? Because the company is big, right? The moat is definitely there. And other than manufacturing and producing a COVID-19 vaccine, they also have lots of other drugs in the market. And of course, they also have a lot of drugs currently in the pipeline, okay, waiting for FDA approval, because as a farmer, for drugs, they need to go through certain clinical testing, right? So they do have a pipeline of drugs in place on top of COVID-19. Now, other than that, they also have a strong track record of dividend history. So they are paying not just consistent, but also increasing trend of dividend. So for people who are actually looking for dividends, right, Johnson & Johnson and Pfizer is something that you guys can consider. Now, let's say I'm a slightly risk taker, okay, that I want to actually so-called participate in the strong growth, okay, of a company. Then maybe you can consider, okay, Novobax and of course Moderna. Now, Novobax and Moderna is slightly small, in fact, much smaller than Johnson & Johnson and Pfizer. Okay, they don't have a lot of drugs, okay, available in the market, right? But then, because of COVID-19, okay, when we actually invest in these two businesses, we can expect a huge growth. Okay, so that's the risk part, and of course the potential growth part. So in terms of the moat wise, okay, whether it's strong and sustainable wise, it is so-called weaker than Pfizer and Johnson & Johnson. Now, in terms of BioNTech, personally, I would not suggest looking into BioNTech. Why? Because BioNTech do not have other drugs, first of all, right? They are heavily reliant on only one drug, which is COVID-19. And currently, they don't have new drugs that is in the final stage of the clinical testing pipeline, right? So they are mainly reliant on COVID-19. And we must also understand that BioNTech actually partners with Pfizer. So Pfizer and BioNTech, right? So which means all the profits, all the sales need to be split lah, okay, between Pfizer and BioNTech. So I would say that if for me, okay, out of these five, I probably will not consider BioNTech, but only probably consider these four, okay, depending on your risk appetite. So that's my view on coronavirus or pharmaceuticals related kind of companies. Right.
So you mentioned risk appetite a few times now in your explanation. Now, how does one define one's risk appetite? Like what as an investor, what is the kind of thing I must think about when trying to figure out what my risk appetite is?
Very good question. Now, of course, different people have different risk appetite. It's very difficult for me to generalize, right? But of course, let me do my best to at least have certain assumption in place to, at least for those viewers outside, right? They know, okay, whether my appetite is higher or, low appetite, right? So I will have few assumption. The first assumption is the age, right? So normally for those people actually age, let's say on the 20s, 30s, maybe the risk appetite can be much higher. Right? Why? Because they actually at their peak, or maybe going to the peak, right, of their life journey. They're actually able to actually make more money, right? They have the better energy level. So if let's say really, for the lack of better word, shit happens, right? They can so-called restart the engine or restart the investment portfolio. Now, let's say for those people who, let's say, maybe at their slightly elder age, right, maybe moving towards their retirement age, 40s, 50s, and 60s, I would say that their risk appetite maybe will actually drop. Okay, why? Because normally at the age of 40s, 50s, 60s, maybe if your family, your financial commitment is there, right? Your children is growing up, go to universities, right? A lot of financial commitment. At the same time, the energy level might not be there, right? Your active income probably hitting certain ceiling, right? That's where you might need to be more conservative in terms of investment. Okay, generate some sort of passive income, second share of income, right? To actually cover yourself, okay, just in case if shit happens, right?
All right, that was very insightful. All right, so we spoke a little bit about the vaccine manufacturer shares and the healthcare industry. What other industries could we be paying attention to this year in terms of investment?
Yeah, so personally, on top of this COVID-19 or healthcare pharmaceutical industry, there's a few other industry that I personally look into as well. Now, of course, with current pandemic, right, it actually negatively affect a lot of industry, but there are certain industry that is positively affect. Now, what I mean is because right now, okay, a lot of us, we actually work from home. Jeremy, you're working from home. I'm working from home. A lot of people actually working from home, right? So how do we work from home? We actually access to the internet, right? Connect to the cloud, right? And we actually access to our company's database, all these things, which means cloud computing industry is booming, right? There's a need, okay? There's a huge demand in cloud computing. And because for 2020, we have been work from home, right? Working from home. And of course, I believe for a good few months of 2021, or maybe the entire year, probably we will be also working from home as well. Maybe these 1-2 years, right, will slowly shift a lot of our working behavior, from traveling to office, maybe stuck in a jam, right, wasting a lot of time. So some people might prefer, or certain organization might give, options. Do you want to work in office, or let's say you want to work from home, right? So there's these options. So there's a need, okay, for cloud computing, industry, right? So now, other than that, okay, because right now everyone work from home, right, access to the cloud, access to the internet, which means cybersecurity is very important. Right? Because previously when we actually go to office, we work offline, right? Cybersecurity, yes, it's there, but the not a lot of emphasis. Okay, but right now with everyone go online, right? The cybersecurity industry is really booming. We see sudden spike of demand. Okay, that cybersecurity is a need there to actually protect our device, protect our database, right? And other than cybersecurity, I would say that 5G industry is also very important. Okay, because especially with right now data analytics, AIs, there are so many data to actually analyze, right? The speed of our connectivity must be there. right? Without 5G, there's certain limitation, right? But with 5G, it able to actually open up another, I would say that open up another world, right, for us to actually explore. And of course, when we work from home, all these things will be much more efficient, right? So yeah, I would say that these three industries, personally, I actually focus a lot in fact, my own personal portfolio, I actually invest in companies that's within this industry as well. Right.
Very interesting. So the way I gather, the way you've been explaining it so far, and I'm just going to recap here for our viewers, it's very important to just have a gist of just what the trends are in like even your lifestyles and the products being offered, and just like how, as more people are doing these things, you might want to look into the industries related to them. So the industries you mentioned earlier on are just kind of like the trends on the uprise, I would imagine. Yeah.
Yeah.
So which leads to the next question. And what about those industries that have been affected by the pandemic? Stuff like airlines or leisure facilities or travel and all that kind of stuff. I mean, they took a hit last year. So would it be something to look into, like hoping there's an opportunity that they will come back this year or the next year or so?
No, at least personally, I don't think they will come back by 2021 because looking at current coronavirus, right? But maybe 2022 and onwards, they will actually come back. Now, for me personally, right, for my investment, I will avoid investing in airline companies. Right now, I will invest in traveling companies, leisure industry, right? But personally, I will avoid investing in airline companies. Now, I will avoid investing in airline companies not because of pandemic, right? It's not because of coronavirus. In fact, before coronavirus, for the past 10 years of my investment journey, I also don't invest. I don't invest in them. It's because of the industry itself is very, very competitive in nature. Now, what do I mean here? Because, I mean, let's say you want to travel, okay, assuming there's no coronavirus, right? Let's say you want to travel from here, let's say you go to Japan, okay, for traveling, right? Would you at least go to, let's say, a website, okay, it's called skyscanner.com, right? Go and do certain comparison of flight tickets, right? And as long as you're able to travel to the destination safely at a time that you want to, right? Would you choose the price that is slightly more competitive, right? Well, I mean, probably not 100%, right? But most people will do that.
Yeah.
That is consumer behavior, right? Most people will do that, right? I would say like at least also 70%, 80% of people will actually do that because to me, doesn't matter whether I take Azure, Mars, doesn't matter for me if I take Jetstar, Scoot, right? To me, I just need to actually fly there, right? Yeah. I mean, for most people, right?
Yeah.
And safely, of course, right? So which means the price is very, very sensitive. So in terms of airlines, there are full-fledged airline. They also have budget airline. So full-fledged airline will be like your SQ, right? Singapore Airlines will be like your Mars Airline, will be like your Qantas Airline, right? Budget will be your Scoot, Azure, Malindo, right? So, okay, Malindo is a bit of mixture, but yeah, you get that, right? So they don't just compete in their own segment, okay? They actually compete together. Because sometimes you realize, right, full-fledged airline ticket, right, is actually much cheaper than those budget airline.
I've seen that happen, yes.
In fact, one of my personal experience that I actually fly to China. Yeah, I fly to China. So, and I take the full-fledged airline. So when I actually look at the full-fledged airline ticket, I realize the business class, the business class is 1,000 Sing dollar. Is it 1,000 Sing or 1,000 ringgit? Okay, I can remember. 1,000, right? And the economic class is about 800 to 900. Okay, and it is a midnight flight. For you, Jeremy, which one will you choose? Business class 1,000, right? And the economic class 800, 900. Which one will you choose? Midnight flight.
I would do business for a little bit extra.
I mean, yes, that's what I choose, right? I mean, for extra like $100, I go for business class. Why? At least I can lay flat, right? Yeah. I mean, 180 degrees, enjoy a bit, and because it's a midnight flight, right? And it's much more comfortable. So that's why pricing issue is there. It's very difficult for an airline company to increase price. So when a company is difficult to increase their price, they don't have pricing power. So they actually very difficult for them to make more money.
Right.
So they need to focus on cost, managing the cost, managing the expenses, right? So that they actually make a lot of profit. Now, think about the cost of airlines, right? The cost is not cheap, the cost is very, very expensive. Like, for example, aircraft maintenance, right? It's very expensive. It doesn't matter whether the flight is flying or not, right? Every 3 years, 5 years, they need to do certain maintenance and or maybe buy a new airlines, right? So imagine thing. When we actually, the money that we make is so difficult, right? Then all the money we make, save, because we cannot increase price because of competitive industry nature, then we need to actually spend it to maintain the airlines, right? Maintain the flight, right? Or buy the airlines, right? What else do we have for investor? Nothing left, right? In fact, that's a quote. Richard Branson. I'm not too sure whether you know Richard Branson, the Virgin Airline boss, right? He said this, do you want to know how to be a millionaire? It's a joke, it's a joke, right? He said, if you want to be a millionaire, very simple. First, be a billionaire, then buy an airlines company. You'll lose so much money and become a millionaire. I'm like,
that's very interesting. So obviously the airlines seem a little bit more volatile than the other things, so the moat
very,
isn't
very challenging. Yeah.
Okay, now speaking of just like volatility in general, though, so aside from like investing in shares, I hear there's a lot of talk nowadays about juggling between the stock market, and then you got forex, and then you got like cryptocurrency, which is the new buzzword about these days. Yeah. Like, what's your take on it? Which is a higher risk? What makes a better return? What, as a seasoned investor like yourself, what is your opinion on these?
Well, risk comes from not knowing. What you know. What you don't know, right? If you don't know certain things, that's why it's high risk. If you know certain things, you're able to actually manage your risk, right? So to me personally, I would say that forex and cryptocurrency have a much higher risk relatively compared to stocks investment. Why? Because to me, I understand stocks much better than forex and cryptocurrency. Why? Because you must understand that forex and cryptocurrency, they are not an investment tool. They are a hedging tool, right? Now, forex and cryptocurrency, they're not a productive asset. Now, what do I mean by productive asset? Forex and currency, they don't sell products, they don't sell services, they don't make money, they don't generate cash flow. So we can't invest into, or we can't buy into forex or cryptocurrency. We can only trade forex, right? We can only trade cryptocurrency, right? So forex, cryptocurrency is not to actually build our wealth, grow our wealth, but it's more of a preserve our wealth, so that it will hedge against inflation. So that's why it's a hedging tool, right? But for stocks, again, because when we invest in stocks, we are actually investing into a business. Okay, so because behind stocks, there's a business. And business is a productive asset. Why? Because the business sell products and services. When they sell products and services, they make money, they have cash flow, and of course, the more money they make, the more money the investor make. So investor able to invest into the stock, invest in the business, and take part into the business growth, and that's how we actually make money. So for me, because I can and I'm able to understand whether the business is good or bad, right, through certain analyses, through the certain let's say I analyze the annual report, or let's say just to be more observant on the trend, right? A lot of people using these products and services. I'm able to do that. But forex or cryptocurrency, we need to actually understand the supply and demand, and not just in terms of products and services, right? You need to understand the politics, right? The economy as a whole. Let's say, for example, US against the euro, right? Maybe against Malaysia or Singapore. That's a very, very complicated stuff, right? So to me, that is complicated. So to me, that actually is a very, very high risk, right? For me, stocks is a much lower risk as comparison, right?
Okay, that's very interesting. Especially like now, recently, like crypto has kind of like taken over a little. Like Elon Musk tweeting like some random coin, and then it goes up, and everybody's pumping money into it. So that kind of volatility isn't the safest thing to get into when you are trying to grow your wealth, and if you don't have money to lose, I guess. So, being a trainer yourself, what is the most common perception that you often hear when it comes to investing in the global stock market? Does it take a lot of money? What's the deal? Because I've never done it myself, and I'd be very interested in hearing what you have to say about it.
Yeah, so there's a lot of misunderstanding or misconception, right? I mean, invest globally. Let's say, for example, I take US as example, right? So US is very far, right? I don't understand the US business. I don't understand the US stocks, right? And USD is very expensive, and I don't have the much capital. Now, a lot of this is misunderstanding, misconception, right? For example, right, when we invest in stock, we are investing in a business. So, have you heard of this brand called, let's say, Apple, Starbucks, Visa? I mean, all these products is actually, I mean, from US. All these services actually from US, and even here in Malaysia, we are using a lot of our, I mean, US product services. Actually, much more than we know, you know. Actually, if you think back, if you reflect a lot of your product services, a lot of us, we use much more US product services than Malaysia-made product services. I mean, if you look at around you, right, your phone, right, your computer, right? I mean, a lot, right? So actually, US stocks, US business, US product services is around us, even we are not in US, right? And the good part is when we invest in US, we don't need to fly to US. We can actually do it at home, right? So it's very, very convenient. Now, of course, another misconception or misunderstanding is US dollar is very expensive, right, compared to ringgit Malaysia, because ringgit Malaysia relatively cheaper, weaker, okay, compared to US dollar. Yep. Right. So of course, right now, $1 is about 4 ringgit, right? 4 ringgit. Now, but you must understand that 10 years ago, right, $1 is equals to 3 ringgit. Right? Ringgit Malaysia is depreciating, okay, against the US dollar, right? Against the US dollar. Now, why? Is because Malaysia is a export country, right? The government, okay, they need to actually manage our currency. Okay? It can't be too high or too expensive, because when the currency is way too high, way too expensive, it might impact our export, our economy, right? However, USD, because US dollar is a global currency, right? So as a global currency, they need to actually make sure the currency is strong, so that people will use it, right? So that's the fundamental reason why ringgit Malaysia is weaker, okay, compared to US dollar, right? Now, of course, when we actually invest in US, right, I would like to say that that's actually a triple gain for us to make, right? First is, of course, capital gain. Second is dividend, right? And third is actually forex gain, right? Because a lot of people thought that, I mean, when I actually invest overseas, this currency risk. Yes, it's true that if you have currency risk, if you invest in a country or currency where it is weaker than Malaysia. Okay? But if we take US dollar as an example, US dollar currency, by the way, I'm not talking about the daily fluctuation. Of course, the daily currency sometimes will be weaker, sometimes strengthened, but I'm talking more of a long-term kind of thing, right? So because our ringgit Malaysia is weaker, okay, than the US dollar, so over long term, we actually will get capital gain, dividend gain, and of course, forex gain. So we don't have currency risk, but we have currency gain, right? And then the third misunderstanding that I heard a lot of people actually talking about is, wow, when I actually invest in US, it's very expensive. My capital is low, right? Now, actually, we also can actually invest in US, even if we start off with limited capital. Let's say 1,000 ringgit, 2,000 ringgit, 5,000 ringgit. We can also invest in US, right? Now, why, right? Because when we invest in Malaysia, the minimum investment is 1 lot. 1 lot equals to 100 shares, right? So that's the minimum investing in Malaysia. Now, when you invest in US, you do not need to buy 1 lot, 100 shares. Don't need. You can just buy 1 share, 2 shares, 3 shares. Okay. So let's say, for example, you have 5,000 ringgit, right? 5,000 ringgit. Doesn't matter you use this 5,000 ringgit to invest in Malaysia or invest in US, you are still using the same value, 5,000 ringgit. Can you see that? Of course, when you convert to US dollar, it's about 1,000. Okay, maybe plus minus 1,000 US dollar, right? But in terms of value, it's still 5,000 ringgit, right? So that's the misunderstanding. The capital is the same, right? But you want to actually invest in a better investment, okay? The company is better in terms of the mode, in terms of the growth, and buy undervalue, so that your capital can actually grow safer and of course sustainably. That's very, very important.
Very interesting. I feel like I've learned a lot already. So,
Thank you.
speaking about the global stock market, then where would you get the best insights for this? Like what, like where, like how would you, and what is your golden rule in investing in the global stock market?
I see. Actually, we can get a lot of information, because right now a lot of information we can get it from Google. So I actually Google a lot, right? But of course, the main source of information is actually from annual report, okay? Because every listed company, they need to issue annual report, right, every year, and quarterly report every 3 months to actually update us as an investor. I mean, how the company is performing, how the business is performing, what's the growth plan, that kind of thing, right? So not just in US, Malaysia as well, right? So is by law, by regulation, right? So other than that, I also in terms of my US investment, I also subscribe to this website called Seeking Alpha, which I think investors, if you are interested in US, can also subscribe to that as well. And other than that, in terms of data analysis, right, I use this platform called the VApp. Okay, so VApp is actually developed by my company, right, for us to actually use it to invest globally, smarter, faster, and easier. In fact, if you have time, maybe I can show a bit about VApp, about 3 to 5 minutes, maybe.
That'll be great, actually. Yeah.
Okay, so let me just show a bit, right? So let me just share my screen. So okay. So this is VApp, right? So this is VApp. So are you able to see my screen?
It's loading up. Yes, now we can. Yeah.
Okay, so let's say, for example, I search for a company in, Microsoft. Okay, a lot of people probably know Microsoft, right? So Microsoft. So a lot of information, a lot of data here. Okay, for example, let's say I can go into certain key financial numbers of the company, right? So for example, Microsoft, I can check out the revenue, the profit, see how they are performing in terms of profitability. Of course, all this we can actually get it from annual report or financial statement, but annual report is yearly. It probably show you at most historical 5 years performance, but VApp able to actually show you like 10 years. So it's like one glance, you can see everything in one place. It's actually much more convenient. And of course, we can see certain balance sheet and cash flow, all these things. But of course, I do understand that a lot of investors says that, Alex, you know what? I don't have any accounting background, financial background. I don't understand these financial terms, right? Financial, ratios, analysis. Well, not to worry, right? Because we also developed this thing called the star chart. Okay, so using key, 106 or 107 key financial matrices, we analyze every listed company in the world. For example, US, Malaysia, right, everywhere, and analyze 5 different areas: profitability, health, asset, dividend, and of course growth. So 10 out of 10 is the best. Of course, 0 means it fails lah, right? So personally, I would prefer 6 or 7 and above. So Jeremy, if you look at this chart, right, what do you think about Microsoft? Are they good?
Looks pretty good to me, yeah.
It's pretty good. I mean, they score well in terms of profitability. I mean, health is very, very strong. Growth, dividend, actually very, very good. So actually, some people might ask, what is this 9? What is this 10, right? So if we just scroll down and click into it, actually it's very, very detailed and very, very transparent, which you can actually read it and of course assess and learn it yourself. So let's say, for example, I go for one stock in Malaysia. Let's say, glove stock seems like it's very hot recently, right? So let's go for Top Glove, right? So you can see that, wow, actually Top Glove is also a pretty decent company. Can you see that, right? Profitability, health, asset, dividend, growth is pretty good. So other than that, right, we also have this V analysis. Now, V analysis actually looking at certain key financial analysis, right? We check out whether this investment belongs to a high risk, medium risk, or low risk. So based on an analysis, Top Glove belong to a medium risk kind of investor. I mean, company or stocks, right? So if your risk appetite is low, right, I would suggest you probably look at medium risk and of course low risk. But of course, if you think that your risk appetite is much higher, right, you can actually take much more risk so that you can actually participate in the growth. Then, of course, all these 3 colors you can actually consider putting in your investment, right? So yeah, this is the VApp that we actually develop, right? And very important is VApp is just not a tool, right? I mean, there are a lot of so-called tools outside available, but why personally I use VM and not other tools, right? For example, Yahoo Finance or Google Finance, right? Because VM is actually licensed and regulated, right, by Monetary Authority of Singapore, right? Now, Monetary Authority of Singapore is the Bank Negara of Singapore, right? So of course, we know that Singapore is actually a global financial hub, right? The rules and regulations is very stringent to protect the financial industry. And VM is actually given the license and being regulated that VM is actually a trusted platform for investors for us to use safely and generate good results. And I think for me as an investor, I want to invest my hard-earned savings, right? I want to make sure that whatever tools that I use, whatever platform that I use is safe, is regulated. So yeah, so that's why I choose VM instead of like other platforms.
And really quickly, where will we get the app if you wanted to like look into?
Oh, it's actually available online. You can just search www.vi.app. Right? Yeah, you can just search online and you can just access and subscribe from there. Right? Yeah.
All right, that's very, very cool stuff. I think, Alex, thank you so much for sharing things with us today. Before we go, though, do you have any final parting words, final bits and nuggets of advice to potential future investors out there who are thinking of dabbling into the stock market?
Cool. I think as an investor, right, before you invest, make sure you have the proper skills, knowledge, and strategy before you invest, because it's our hard-earned money, you see. We work every day, we work hard, save hard, and I think we are the most reliable one and trustworthy one to actually protect it and grow it. So we want to actually make sure that our investment is safe. In order for us to make sure that investment is safe, we need to know it ourselves. We cannot rely on other people. We need to do it ourselves to make sure that it is safe, right? So I think skills and knowledge is very powerful. So I would say that if you want to start, right, you get a proper mentor to actually guide you with a good track record, of course, right? A willing heart to actually share with you, teach you, right, the proper skills and knowledge. And of course, after you learn the skills and knowledge and strategy, make sure to apply it, right? Take action, because if you don't apply it, you won't get the results that you deserve, right? You need to actually apply the skills, the knowledge, the strategy, then you actually generate the results that you deserve. So I think that is a very, very important step to take, okay, for anyone, okay, before invest in the stock market. That's very, very important. Yeah.
All right. And with that, Alex, thank you so much. It was a very insightful conversation for me as well.
Thank you, Jeremy. Thank you.
Take care, and we'll see you soon.
Thank you. Thank you. Thank you for having me here. Thank you. Thank you so much. Thank you. Bye.
And with that, ladies and gentlemen, if you want to find out more about the secret stock investing formula that generates over 30% return yearly, get your free pass to Behind the Stock Masterclass now on investwithvic.com/BTSM-MKini. And until the next time, I'm Jeremy Teo. I'll see you soon.